Welcome to Listen to the Market for February 22, Wednesday. The previous day's lows are marked on the chart, as are the previous day's highs. The message from Tuesday for Wednesday was to expect on probabilities an expansion of range. Tuesday's range was 106 pips. Anyone who was attached to that expectation or attached to that probability of an expansion of range would have been bitterly disappointed, as the range on Wednesday between the low of the day and the final high of the day was merely 56 pips. It goes to show that no rule set is 100% accurate. That's a reality of life and something that we all need to learn to live with. Yesterday's price action is a great example of how a one-dimensional trend-following approach really gives you a hard time when the market is not suited for a trend-following approach. Wednesday saw the market open, have a small rally, come down, up, down, up, down, up, down, down, up, down, up, down, up, and down, up. Any trend follower in there would have received more losing trades than winning trades and a net loss for the day. How would a L.I.V.E student or a L.I.V.E trader fare? Well, I just got an email from a student of mine who actually is applying the L.I.V.E rule set in real time with real money. And he reported that for yesterday, Wednesday, his return was 1.72R. The campaigns that he had primarily was the short down through there and the long through there, and then a couple of losing trades in through there. So strike rate of 50%. Again, no great shakes. What does a return of 1.72R actually mean? Well, if someone's playing with 100 grand and risking 1%, that's $1,000. So 1R is $1,000. So that simply means at the end of the 5-hour session, from 7 p.m. to midnight, which is the time the student was applying it, the return would have been $1,720. Or someone who's playing with $10,000, $172. Not setting the world on fire, but just do the maths yourself. If you end up with a 1% return positive per day times 220 days in a year, by how much would your account have grown? Much better than bank interest rates, I'm sure. Another way of looking at the return, or any return, is what's the R return per hour? So in other words, what's the earn per hour in exchanging 5 hours of my life, or your life, from 7 p.m. until midnight yesterday, trading the markets? The return was 0.34 of R per hour. So translation, if R was $1,000, then it was a return of $340 sitting in front of the screen from 7 p.m. through until midnight. If R was $100, then for the same time frame from 7 p.m. until midnight, the return or the earn was $34 per hour. Either way, not setting the world on fire, but equally not shabby. So yesterday's price action is a great indication of, in fact, the real-time application of the L.I.V.E rule set and how it survives, even though the message from Tuesday, being for a larger range, didn't eventuate. So in what would be best described by most people as a scrappy day, 56 pip range with a lot of internal movements, to end up with the account growing by 1.72%, not too shabby at all. So that's it from me, guys, for today. Catch you next time round. Thanks for watching. Bye for now.